Hi, everyone. It's Matt Donahue with Mission Financial Planners, and this is your weekly market update for the week ending of August. Let's go ahead and jump into it. So, the week in review, we're going to start with the economic scoreboard. Second quarter GDP grew by a healthy 3%. It is strong, but not explosive. Job openings ticked down by 250,000, continuing a softening trend. And non-farm payrolls got a weaker than expected gain of just 73,000. It's not ideal, but it's not alarming yet. Looking ahead, we'll get updates on international trade and the latest Purchasing Managers Index, or PMI. These numbers will help us get a feel for how global demand and supply chains are holding up. America runs on consumerism, as we all know. That post-COVID spending drove the GDP surge we saw in 2023 and 2024, but now the engine is starting to cool off a little bit. Consumer companies are reporting slower sales growth. Customers aren't shutting their wallets, but they're becoming much more deliberate about what they purchase. Cruise lines are still riding a wave, but hotels and airlines, not so much. Retailers are seeing trade downs, lower income consumers shifting to discount options, while wealthier consumers lean into bulk buying. The wild card, tariffs. Companies face pressure to raise prices to offset rising costs, but confidence is shaky. Inflation fatigue is real, and tolerance for price hikes is wearing. Still, don't underestimate the consumer. Net worth has risen by $50 trillion since the pandemic. Consumers have $9 in assets for every $1 in liabilities. Yes, delinquencies are rising in student loans, auto loans, and credit cards, but those only make up 25% of total liabilities. Banks are still upbeat in Q2 earnings calls. They reported slightly better credit quality and balances that are still above pre-pandemic levels. That said, keep a close eye on the labor market. If job losses accelerate, consumer spending will stall, but if layoffs remain limited, we should still see slow, steady growth. Let's talk focus and the power of owning your choices. Epictetus once said, "You must stop blaming God and not blame any person. You must completely control your desire and shift your avoidance to what lies within your reasoned choice." Heavy words and timely ones. As an example, Nelson Mandela spent 27 years in jail under apartheid. For 18 of those years, he had a bucket for a toilet, a tiny cot, and one 30-minute visit per year. But he refused to let his captivity define him. He walked slowly when they told him to run. He shadow boxed, he jumped rope, and he kept his head up. As one fellow prisoner put it, "We are going to set the terms." Mandela lived that Stoic discipline, and so can we. Ignore the noise, stop chasing or blaming, choose your response, don't get emotional, get focused. This week's tax tip: disaster proof your documents. Let's be honest. Tornadoes, fires, hackers, good old fashioned forgetfulness, floods. None of that stuff cares about your filing system. Here's how to outsmart chaos. First, back everything up electronically: cloud storage, flash drives, even a fireproof hard drive. Just keep a backup somewhere other than your kitchen drawer. Second, take photos or videos of your valuables. If you ever need to file an insurance claim, you'll be glad you did. Third, revisit your emergency plans. Life changes, so should your response plan. Want to get nerdy with it? IRS publication 4557 is your friend. It's all about safeguarding your data. And if you lose your tax records, no sweat. Transcripts from the IRS are free and they cover the last 3 years. Full copies cost money and take time, which is 75 days or more, so plan ahead. If you're a Mission Financial Planners client, don't forget your secure vault is there and ready for you to use. Store your most important financial records safely and conveniently. College planning. My kids are getting a little older, so this is becoming more and more important in my thinking. College costs are expensive. Some schools now are over $300,000 for a bachelor's degree. Price is never the same as value. Look, I get it. You want the best for your children, but obsessing over elite schools could cost you your retirement, and it might not even help your child. Research from Gallup and Purdue University shows that engagement, not prestige, is what predicts success in school. What mattered? Having a mentor, working on long-term projects, real-world internships, active campus involvement. Less than 3% of college grads could say yes to all 6 success factors. We have a client whose daughter went to a small school in Pennsylvania, graduated with zero debt, launched a startup, and living the dream. And they didn't have to break the bank to do it. So don't fall for the rankings trap. Cast a wider net. Look for scholarships. Think about outcomes and less about logos. If you need help crafting a smart college plan that won't wreck your financial future, let's talk. That's it for this week's market recap. For charts, disclosures, and all that fun stuff, have a great week and stay focused. Thanks again, everyone.